Progress.
Morning, students. Good morning, everyone.
Good morning, ma'am.
No energy in the morning itself. Some are still sleeping. Morning. I think if you are awake, no problem. So what did we discuss yesterday? Which standard are we doing? Anyone? Which standard are we doing, and then what did we discuss in that standard? Just a brief.
A2
Yes,
valuation of inventory.
one by one, please, because all are unmuted by default. Please don't have a cross talk; it will disturb again. So please, one by one. Okay.
AS2 valuation of inventory.
Who is talking, ma? I can't see who is talking.
Aditi.
Okay, Aditi. Yes, continue. So, what is discussed in AS2? Nothing?
Ma'am, are you asking me?
Yeah.
Okay. So in inventory, we find out that inventory is something which a manufacturing company keeps for the sale in the ordinary course of the business, and also in the production of process, and also for the consumption in the production process. Inventory contains three things: a raw material, work in progress, and finished goods. In AS2, cost or NRV, we consider whichever is lower, and
Okay.
also for the kind of a GST credit. If GST credit is available, so it will be an expense, and if it is not available, then the GST credit is not available, then it will be a cost. And
Okay.
NRV is a net realizable value, which we get when we go in the market to sell it.
Mhm.
And that's it, ma'am. What I know.
Okay. We'll ask one more person. I'll pick a name whom I didn't speak yesterday at all. Let me
Ma'am, I
pick.
can speak.
Who is that?
Ma'am, Nisha.
Okay, Nisha, continue.
Means there are exclusion in accounting standard 2.
From the scope, right?
Yes, ma'am. From the
Yeah.
scope, that is construction contract,
Mhm.
work in progress of service provider, shares and debenture held as a stock in trade, and producers inventory of livestock, agriculture, and forest producers.
Okay.
And on cost, we bifurcate into three types: cost of purchase, cost of conversion, and other
There's
costs.
one more, no? In the exclusion, I also talked about PPE. Remember?
Yes,
The
ma'am,
machinery is
property,
there.
plant, and
Yeah,
equipment
machinery is
in
there.
accounting standard 10.
Yeah. Okay. And
There are three types of cost we study: cost of purchase. In cost of
why did
purchase,
we talk about cost? Before you speak about what is cost, why did we talk about cost?
ma'am, because we have to calculate means inventory, whichever means NRV or cost whichever is lower.
That is valuation technique, right? How do you value inventory? By using cost or NRV, whichever is lower. For that, we needed cost, wherein the breakup of cost came in, correct?
Yes.
Continue.
So ma'am, we bifurcated cost into three types: cost of purchase. In cost of purchase, we add expenditures
Like
and
expenditures. What is the main cost in the cost of purchase?
ma'am, duties and taxes.
Okay, that is a cost, I agree. But what is the main cost in cost of purchase? The word itself says, no?
Purchase price, ma'am.
Purchase price, yes.
And rebate, if any it is given, it will be deducted. Duty
Deducted,
drawback.
okay.
Duty drawback also it will be deducted, ma'am.
Okay.
Now cost of conversion.
Mhm.
In cost of conversion, there are direct labor, overhead, joint cost. In overhead, they are of two types, fixed overhead and variable overhead. In
Okay.
fixed overhead, that is absorbed of higher of actual capacity and normal capacity.
Okay.
In in variable overhead, consider only actual capacity.
Okay. Why are we considering only actuals and variable? Can you just tell me quickly?
Ma'am, because in fixed overhead, ma'am, because if we observe more, ma'am, we study in example two, that three cases, by that we can say that,
Okay.
ma'am, in joint cost, ma'am, in joint cost, if it is by main, matlab from the production, it is mainly it is coming, then we split off.
Mm.
Ma'am, this clearly, I don't know, ma'am. Joint product, I forgot, ma'am.
It is fine. It is fine.
Yes, ma'am.
We'll ask one more person. Yeah. Okay, then Lakshmi.
We follow an inventory value technique, ma'am. We have historical method and also we have a non-historical method. And the
Mhm.
historical method, we have a inventory which is not ordinarily interchangeable, which means where the product of raw material cannot be used in another production, which is specific. Only to that production we can use it. So for that valuation, we're going to take the lower of the cost of NRV we are going to take.
What is that
And
method
invent
called? Specific identification method, right?
specific, yes, ma'am. Specific and in identification method. And inventory ordinarily can be interchangeable. That is, the raw material which can be interchangeable can be valued by um, uh, FIFO method and weighted average method. LIFO we're not
Okay.
going to consider. And non-historical method, we are going to take selling price minus the gross margin, that gross profit. Then whatever we get, that we are going to take it as a cost.
That is called
And
which method? Adjusted selling price method, right?
adjusting price, adjusting selling price.
Okay. So these were the valuation techniques or the valuation methods that we have seen how to
Yes.
measure. Okay. Did we discuss anything
And
else? Or
then we have a measures of inventory. We have raw materials and finished goods we had. And the raw materials we will take uh, the cost of the we will take the cost if the selling price is more than the cost. We're going to take it
at
at
or
cost.
above? It is at or
Uh,
above, you take cost.
okay. Or we are going to take the replacement cost if it
Right.
is
If it
not.
is below,
And
then you take the
yes. And for the finished goods, we have a and the finished goods only we have a lower of the things, like
right.
we saw the cost of the purchase and cost of conversion, other cost we had, and also we had some exclusion, that is to determine the cost, and another one is NRV. We're going to compare these two, whichever is lower we're going to take it.
Okay, good. I want one more person. Anyone who is interested? Or should I pick? Very small question. John?
Ma'am, am I audible, ma'am?
Yes, John, you are audible. John, tell me what is net realizable value? A very simple question. They told me that the valuation technique is cost or NRV, whichever is lower.
Yes,
Tell me what
ma'am.
is NRV and how do we calculate it?
Ma'am, realizable value is the final value that we can realize to sell that product in the market.
Hmm. No,
So
but how do you calculate it?
we calculate it by deducting the additional gross profit margins gross additional the charges that you can apply after the product was finished, ma'am.
No, what do we call it then? I mean, you're saying in a general terms, but in our accounting terms, how did we talk yesterday?
Selling price minus cost to sell, ma'am.
Cost to sell. Okay, that will give you the NRV. Okay.
Yes, ma'am.
Fine. So I hope you all have gone through whatever we have discussed yesterday, and I think I asked you all to do 2 problems also, if I'm not wrong. Did you all do
Yes,
them?
ma'am. Yes, ma'am.
Was it easy or difficult?
Easy, ma'am.
I think it is almost same. We have done a similar kind of problem, so I think it should be easier only, right?
Yes,
Any
ma'am.
questions in that 2 problems that I have given you? Anyone? Before I move on, any questions in those 2 problems?
No, ma'am.
So I'll move on.
For me, it's no, ma'am.
Okay, fine. So yesterday we started with AS2 inventories, and then we discussed about the definition, the meaning of inventory, then how to value inventory. Then in the process we learned about what is included in cost, what is included in NRV, how to calculate the cost of a inventory or the NRV of an inventory. Because the standard says you should take cost or NRV whichever is lower, we have calculated both of them. But this cost or NRV whichever is lower applies to mostly the finished goods and the WIP. For raw material, it is either cost or replacement cost, which depends on the finished good ka selling price. We have seen that. And we also have seen the methods, different methods of valuing, wherein if it is a historical method or non-historical method, if the inventories are interchangeable or not interchangeable, how different methods are used, like specific identification method, FIFO, LIFO, weighted average, and adjusted selling price. For adjusted selling price, we have done one problem also. And I think for cost or NRV, whichever is lower, also we have done a problem. Now I think we are almost coming to the end of this inventory scar standard. This was the main part or the last part of the standard. We discussed all of these. These are done. Yeah. So this is the last part of any standard. It's not like AS2. Any standard, ends up with disclosures. What are disclosures? Now, when I say disclosures, since this is the first standard we are discussing, I'll tell you what is a disclosure. But from now on, you understood what is disclosure, then you will automatically ask for what is a disclosure in any standard. Okay. In this standard, disclosure means what are you disclosing in your financial statements. Now, when you have your financial statements, you prepare your trading account, you prepare your P&L statement, you prepare your balance sheet. If it is a manufacturing concern, you prepare a manufacturing account also. Right? It depends on what kind of a business it is, and accordingly you prepare the financial statements. And in the end, you start to write notes to accounts. Yes. What are these notes to accounts? You mention note 1 and then say that in my equity, I have these things, or in my capital, I have these things involved. Or suppose I will have to show note 2. Then what will I write? I will write my PPE and I will show what are the different classes of PPE I have and so on. So every notes to account will have some details about the preparation, whatever you have done in your financial statements. Now, disclosure is something that you will do in this notes to accounts, wherein you will have to, suppose we are talking about inventories. So I will take, let's suppose we are doing note 3, inventory. Okay. So what has to be disclosed in this notes to accounts? The disclosure, according to the standard, says that you will have to first say what are the accounting policies adopted in measuring the inventories, including the cost formula, which means you will have to tell them, did you use FIFO, LIFO? LIFO is anyway eliminated, FIFO or weighted average. Or did you use cost or NRV, whichever is lower? And what other accounting principles you have used? All these have to be disclosed in that particular notes to accounts. This is the first thing. First thing that we disclose is what did you use? How did you calculate the inventory? Because what happened? when you are preparing P&L statement, you must have told closing inventory is having a value of 10 lakhs. Okay, rupees 10 lakhs. You just have given that in your trading account, and also in the balance the closing stock available with me. But who will tell them? As an investor, if I am looking at the financial statement, I need to know how this was calculated. How this 10 lakhs is calculated. I need to know. I have that right to know how 10 lakhs was calculated. Maybe you must have overstated or understated. How will I know all these things? I will only know once I know how you have calculated, what policies you have adopted, or what formulas you have adopted to calculate this. So that's the main thing I will have to know. So first thing is to let them know what were the formulas that you have used, or what is the valuation technique you have adopted for calculating the inventory. That would be the first thing. And the second thing would be the total carrying amount of the inventories together with classification. Now, this classification means what? When you are talking about the notes to accounts of inventory, you will have to also mention what are the different classifications. Like you will mention first class as raw material. Okay. Then second, you will mention WIP. Then you will mention finished goods. Suppose you have spares, you'll mention that. Or if you have loose tools, you'll mention that. Whatever inventory you have, the breakup, the classification, because all these together, you told them that the value is 10 lakhs in your trading account and the balance sheet. But what is the value of each one of them? Each classification of inventory have to be mentioned in your disclosure. That is the second part, right? So the first one says, you tell me how you have calculated, formulas used and policies adopted. Second one says, tell me the classification of inventory. What kind of inventories are involved in your particular, books of accounts? Because not everybody has raw materials, WIP, finished goods and all. Few people might only have finished goods. Whatever is the classification you have, whatever are the inventories classes you have, all of them have to be mentioned in detail. So in this second point, they will tell you that raw materials, I have 1 lakh inventory of raw materials. Then WIP is some 3 lakhs. Finished goods are 2. Spares are just 10K. Loose tools are some 20K. So this breakup have to be given to the investors or the stakeholders, right? They have a right to know. They wanted to know all these things, because when you directly tell them a figure, we'll agree to it. But how did you calculate? I need to know that as well, right? For that purpose, these disclosures are brought in, not just for this standard. For every standard, you will have this kind of a disclosure. Disclosures will tell you what you will have to disclose in the end to the investors or to the stakeholders in the form of notes to accounts. For PPE or for any standard, they will tell you. Mostly disclosures will involve the formulas used, or the policies you have adopted, how did you calculate, what is the value. All these breakups are given in disclosures. In AS2, these are the two things that are asked for in the disclosures. Is this fine? So for every standard, you will have to understand that asking what are the disclosures is important, very important, right? Now, when you are talking about any standard, just any standard, mostly try to see for meaning or definition. This is the first thing you should know when you're learning any standard. Okay? Then you will have to see for scope of that standard, because every standard will not cover everything in the world, right? They will only cover some part of that particular accounting balance. It can be anything, but whatever it is covering, what is covered under the scope of that accounting standard, that is important to know, right? Then exclusions, if any, right? Do you have any exclusions from the scope of this accounting standard? That is the other thing you should know. Because what is covered, you are learning that. But what is not covered, why are they not covered? That also that also should be understood in any accounting standard. Later comes recognition. Okay. Now, how will you value this, or how will you record this, or how will you recognize this in your books of accounts? That has to be done. In AS2, we had about valuation, right? That is what we have learned in the recognition part. How will you recognize inventory? How will you value it? We have learned that, right? That is more important. And the last part is the disclosure part. Some standards will also have derecognition. Okay. Recognition means recording in your books of accounts. Derecognition means removing from your books of accounts. When will you remove something? When you actually sell them or it is no longer used, then you have to remove it. This will come mostly in few standards, not in all of them. It applies according to the standard. So, but this is the structure of any standard, wherein it starts with the meaning or definition of the standard words, then the scope of the earning standard, any exclusions from the scope, the recognition or how to record it or how to value it. If derecognition is there, that is also applied, and then disclosures. This is the main structure of any standard, not this, any standard. Fine. So I'll come back to the questions. So this question, illustration 1 is done. I'm assuming you have finished it because it is very simple one. Cost or NRV, whichever is lower. Okay, now look at the illustration 2 once. I think we didn't do this, but it is almost similar to what we have done before. Look at this question, illustration 2 quickly. What is given in the question? What is this 40 lakhs? Can you see? Can you read the question? X Company Limited purchased goods at the cost of 40 lakhs in October 2011. Till March 2012, 75% of the stock were sold. 75% of the stock is already sold, correct? Okay. Now, what is the stock that is remaining? What is the stock that is remaining? 25% of the stock is remaining. Agreed, everyone? Are you all with me?
Yes, ma'am.
Okay, please keep responding also, because I feel that nobody is there. Okay, so 75% of the stock is sold, which means 25% of the stock is remaining with us. How much is remaining? 40 lakhs into 25% is remaining with us. This is almost equal to 10 lakh. 10 lakh is the closing stock, cost of closing stock. Agreed, everyone? What is the cost
Yes,
of
ma'am.
closing stock? 10 lakhs.
10
Now,
lakhs.
yes. Now the company wants to disclose closing stock at 10 lakhs. That is correct, because 75% is already sold, 25% is left. The cost of the 25% is 10 lakhs. So they're right in that. But we also have to check what? NRV. Yes or no? We also have to check NRV, because the standard says it should be cost or NRV, whichever is lower. If NRV is given to us, then we will compare these two. Let us check if NRV was given. The expected sale value is 11 lakhs and a commission of 10% on sale is payable to the agent. Now advise what is the correct closing stock to be disclosed at 31st March 2012. Now just give a try, because this kind of a problem we have done. Just calculate what is NRV. Tell me. Expected sale value is given to you. A commission is also given to you on sale price. Calculate what is NRV.
Nine lakh 90,000, ma'am.
Much? 9 lakh?
90,000.
90,000. 9 lakh 90,000. Okay. So this is NRV. Now, cost or NRV, whichever is lower. What is lower here?
9,90,000.
So what will be our value of inventory according to the AS2? 9.9, right? It is 9,90,000. And the company who wants to disclose the closing stock at 10 lakhs, they are right if they have to follow cost method. But as per the standard, if you have to follow, it should be lower of cost or NRV. So you can only record it at 9,90,000. So we will write what is the standard talking about, and then say that this is the cost, this is NRV. Since this is lower, you will have to follow NRV is what we will have to conclude. These kind of a questions. If you look at this first illustration, you can do such kind of questions in a tabular format. Because more of numbers are involved, you can do it in a tabular format. But when you come to these kind of a questions, it is almost like a theory based question, right? So you have to explain what is given in the standard first. Such kind of a questions, you explain what is told by the standard. The standard must have given you something, the rule or whatever principle has to be followed by the standard. Mention that first, then mention or calculate the values according to the question, and then conclude what is your answer according to the standard and the given question. Follow this kind of a format for any accounting standard, wherein we are trying to say what the standard is saying first, then about the question, and then what is your conclusion on it. When it is this kind of a case-based or a scenario-based questions, when it is like this problematic, then you will follow anyway the tabular format along with some theory if it has to be written. Is that okay? Now look at this question, illustration 3. Look at this illustration 3. In a production process, normal waste is 5%. 5,000 metric tons of input were put in process, resulting in a wastage of 300 metric tons, right? So generally, normal wastage, I hope you all know it, right? When some units are put into the machinery in the process, it is not needed that you get the same kind of an output or the same number of units will come out of it as an output. It will have normal wastage. Definitely it will have a normal wastage, because in the process you will lose some raw materials or you will lose some number of units. Same thing is this question. Now we had given an input of 5,000 metric tons, right? When you have given 5,000 metric tons, we are expecting to have 5% wastage, which means what is the normal wastage? What is the normal wastage that we are expecting? 250, correct. We are expecting that we will have a wastage of 250 for sure, that we are expecting. Right? So 5,000 metric tons is what is our input. Now in this input, we are expecting 5% wastage, which means we expect that there will be 250 metric tons of normal wastage. This is normal wastage, not abnormal wastage, right? But what is our final output? Can you see, complete the question here? Yes.
Final
What is the
output,
actual
ma'am,
wastage?
what actual
What is the
wastage is 300 megaton.
Yes. So 300 metric tons is the actual wastage, right? Okay. Now, what else is given? Cost per metric ton of input is 1,000 rupees. So per each metric ton, the cost is 1,000 rupees. That is given to you. The entire quantity of waste is on the stock at the year end. Almost at the year end, we had that wastage. State with reference to the accounting standard, how will you value this inventories? How will you value the inventories in this case, right? This case, we had both normal and abnormal wastage. Both are there for us, right? Now, normal wastage is how much here? 250. 250 metric ton, we know that we have already expected. But what is the abnormal wastage here? So if I divide this,
50 metric ton, ma'am.
250 and 50
50.
metric ton. Yes. So this is a normal wastage, which we have already expected. And this is the abnormal wastage.
Abnormal.
Yes. Now, the question was not about dividing them into normal wastage and abnormal wastage. They're asking you to calculate what is the value of inventory. right? Now we will have to calculate the value of inventory. They told that cost is 1000 per metric ton. Yes or no? Now, how many metric tons did we give input? 5,000 metric tons. Do you all agree to this? The input was 5,000 metric tons, and each metric ton is costing us 1,000 per metric ton. Till here, clear?
Yes, ma'am.
Yes, ma'am.
Yes. Now, what is the total cost? This will be how much?
50 lakh, ma'am.
50
50
lakh.
lakhs.
50 lakh rupees is the total cost. Fine. But this 50 lakhs, we will not divide based on the input metric tons that we have given. You will have to divide this based on the output that we are expecting. What is the output that we are expecting? 4750 metric tons. Agreed, everyone? This is because this is my normal expectation. I know that there will be 5% wastage. So our input, though I have given 5,000 metric ton, I will only have an output of 4750. This is my expectation. So in the denominator, I am going to take 4750 only, not 5,000. This is clear?
Yes, ma'am.
So what is this value?
1052.63.
105?
2.63.
63 per metric ton, right? So we had a difference. This is what is the actual input that we have given, but we are calculating the cost of metric ton based on the output that we are expecting using the normal wastage. I hope till here it is clear. Now let us move on. Now 4,050 is what is expected, correct? But what was our actual output? Only 4,700, because they told we had a loss of 300. So 50 is abnormal and 4,700 is the actual output we had. So calculate the cost now. 1052.63. This is also 1052.63.
Why you take 750 MT, ma'am?
Here?
Yes, ma'am.
Because this is what is my expectation, no? Do you think I will expect 5,000? Because I have already known that. Before even giving the input itself, I know that 5,000, if I give input, it will only come out as 4750. I know that normal
Okay,
wastage is 5%. I know that only 4750 will come out. 5,000 will not come out. I know that before itself. That is why I am
Yes.
assuming 4750 as my metric ton should be the output. But did I actually get
Yes.
4750? No, I only got 4700 metric
Understood.
tons as my output. That 50 was the abnormal.
Yes, ma'am. Understood.
Ma'am, I have a doubt. Like in the above, we have we have differentiated that abnormal and normal. Then why again we are taking this 50? Like 4750 should be calculated now. That is 1052.6.
We are calculating the cost for 4750 only, but then breaking that into two things. This is abnormal loss. This will be abnormal loss. We are breaking that into 4750 only. That's why I've written 4750 here. And
So
this will be,
this has to be done two times. Now, like in the above also you have differentiated, and then now also.
if you don't do this all, this one, if you don't do it also, it is fine. This is for our understanding. For you to understand what is normal wastage and abnormal wastage, I have done this. But you have to do this. You have to do this. And then you will have to do this calculation. These three are the important. This is for your understanding, this table I have drawn. This you can ignore for your understanding. Because we need to know what is the normal wastage and abnormal wastage I have done.
Ma'am,
Okay.
Yes, nobody told me the value. Waiting.
49 lakh 47,361, ma'am.
Which one? The first one?
Yes, ma'am.
Yes.
What?
49,47,368.
360?
8, ma'am.
361, ma'am.
1 or 8, whatever it is. Maybe according
No,
to the
approx,
decimals, you
ma'am,
must have
approx.
got.
Yes.
Yeah. The other one?
52,632.
52?
632.
Ma'am, we inflated cost per unit because of normal loss, right?
Yes, yes.
Okay, ma'am. Ma'am, but like how is possible? Like how can we charge the same for the abnormal wastage too? Like
Let me complete this. 1 minute.
okay, ma'am. Thank
What
you.
is the value? Total. Tell me this. 526.
50,631, ma'am.
631. I'll write
0.5.
632 because this
Yeah.
two. I am rounding it off. Together, is it coming down to 50 lakhs? Just check. It should. Is it coming down to 50 lakhs together? But you
Yes,
check
ma'am.
it again. It is coming? Maybe decimals difference 1 or 2 because of your rounding off. Otherwise,
Yes, ma'am. Total figure is 50 lakh.
yes. So Anil,
Yes, ma'am.
since you
50 lakh.
asked this question, Anil, so why did we do this?
Yeah, ma'am.
Inflation, or why did we do it for the 4750 is because of this. Because that 50 lakhs, whatever total cost I have, I cannot distribute for 5,000 metric tons. This 5,000 metric tons is never an output to me. This is not my output. This will never come out. This will never come out as an output to me. My output is only 4750. My expectation is that output will be 4750. So my calculation also should be done according to 4750 only. Okay. This is like the input cost that we
Okay.
have given, 50
Okay, ma'am.
lakhs. But the output you get will be for 4750 metric tons only. So accordingly, I am
Yeah, ma'am.
calculating what is the cost per metric ton and then divide it into abnormal and not total cost of inventory. Is this clear?
Okay, ma'am. Thank you.
So this is
Yeah,
the
ma'am.
value of
Thank
inventory.
you so much, ma'am.
Yeah, no problem. So this is the value of inventory and this is the value of abnormal loss. Both together, it will come down to 50 lakhs, which is nothing but our total cost.
Ma'am,
Clear?
could you please zoom out?
Zoom
Could you
out?
please zoom out?
Yeah. There are other extra figures also, just when you're taking a screenshot. Is this okay? Fine?
Yeah, okay.
Good morning, ma'am.
Morning.
Ma'am, please explain in Hindi also as well as do फिर टॉपिक में अच्छे से समझ में आता है मैम.
But it is difficult for me also. Adding 1 or 2 words is fine, but Hindi mein to little difficult. I'll try. Okay.
Okay, ma'am.
Shall I move on?
Yeah, ma'am.
Okay. So this is our next question, illustration 4. Look at this question. You are required to value the inventory per kg of finished goods, consisting of material cost, direct labor, direct variable overhead. They have also given you fixed production charges for the year on normal working capacity of 2 lakh kgs is 20 lakhs. And 4,000 kgs of finished goods, are in stock at the year end, right? So the question here is about mostly the cost of conversion. If you remember, I told you cost of conversion will involve labor and overhead cost and also raw material cost because that is basic thing. So raw material, labor and overhead cost is involved in cost of conversion. So when you are calculating the cost of conversion, the inventory ka value, you will have to include all of them, raw material, labor and overheads, whether it is fixed or variable overhead. I think in this question, they have given you all the information. What we have to calculate is what is the cost per each kg of a finished good. What is the finished good here? 4,000 kgs. They told that at the end of the year, you have 4,000 kgs as your finished goods. Right? Let us do this. There's no name given. The first one is the material cost. Are you all with me?
Yes, ma'am.
Yes. So material cost is 200. What is the next cost?
Direct labor, ma'am.
I'm swapping between the tabs to see the question and the whiteboard. I hope you can see both. Please just confirm, no? When I'm swapping, you can see both whiteboard and the question, right?
Yes, ma'am.
Okay. So,
Direct labor 40.
yes. Direct labor is 40.
Direct variable overhead is 20, ma'am.
Is 20. Okay. Now, there's one more thing given in the question, which is fixed overhead, right? They told that fixed overhead normal capacity is 2 lakh kg. And what is the total fixed overhead? 20 lakhs. That is the total value. 20 lakhs is the total value. Can I take 20 lakhs here as fixed overhead? I asked a question. Can I take 20 lakhs?
Yes, ma'am.
Can I take
Yes,
here?
ma'am.
No, ma'am.
No, ma'am. No, ma'am.
Why no? Why
No,
No,
yes?
ma'am. Per unit,
Yes. All these are what? Per unit cost. And this is the total cost. Can I take all of them together? No, one is per unit and one is total cost. That cannot be done, right? Either everything have to be in total value or everything have to be per unit. Agreed?
Yes, ma'am.
So now fixed overhead also have to be calculated per unit. Can we do it? Yes, because they gave us the total value and the total number of units also in the capacity. So we can do it. Now, what is the total value of fixed cost? They told it is 20 lakhs. And what is the capacity? It is 2 lakh kgs. So what is the fixed overhead per unit?
10 lakhs.
It can't be
No,
in
ma'am,
lakhs.
10 rupee per kg.
Yeah, because we are calculating per unit. No, it should be in per unit. So what is the total?
270, ma'am.
270. Okay. This is per unit. This is per unit, right? Now, number of units of finished good. They told that we have 4,000 kgs of finished goods left in the stock, right? So what are the number of units? 4,000. Total value, or I'll write cost because we are calculating cost. Total cost of inventory. What is the value? It is 4,000 into 270 per kg or per unit.
It is 10 lakh 80,000, ma'am.
10 lakh. Is this clear, everyone? Very simple only. Direct question, I can say.
Yes,
Yes,
ma'am.
ma'am.
I'll move on.
Ma'am, hello.
Yes, yes.
Hello? Ma'am, am I audible?
Yes, Mehak, tell me.
Ma'am, it's mandatory to write every theories concept in exam.
I didn't get you, huh? Can you repeat?
Ma'am, it's mandatory to write this concept in accounting standard in above math.
You're asking about the theory part that you have to write?
Yes, ma'am. Yes, ma'am.
Yes, whenever it is required or whenever it is needed, you have to write. You have to write about what is talked about in AS2, right? How to calculate AS2.
Okay.
AS2 told you, that when it is when you have to calculate the cost cost of conversion, cost of purchase, and other costs have to be involved. It is given in the standard. So that part you will have to write. Yes.
Okay, ma'am. Thank you, ma'am. Thank you.
Ma'am,
Yes.
ma'am, in finished goods, we have already incurred profit in that, right, ma'am? We should less the profit if they in question they given.
We are calculating cost here, no? We are not calculating any profit. It was not selling price calculation here in the question, no? It was only about cost calculation. So, because why are we doing only cost? Because cost or NRV, whichever is lower, so we are only calculating cost. Like you mentioned, if selling price is given, then you will remove gross profit to get cost if cost is required. That way, reverse way you can come. But I mean, it depends on the question. But here, the question was asked to calculate cost of the inventory only and not the profit or the selling price. So we have done only the cost calculation here.
Okay,
Is that your question?
Yes, ma'am. It's my question. That all.
Yes, Aditya.
Ma'am, I have one doubt. If they give an accounting standard questions case scenario based, can we write in the own word, ma'am?
When you are quoting a standard number, okay, when you're quoting a standard number and writing something, it has to be in the words that is given by the standard only. Okay, when you're explaining about that, then it can be in your words. But standard when you're quoting and writing, no, it has to be as it is from the standard, like what standard has mentioned clearly. After that, you explain in your own words into 2 or 3 lines. That is fine. But when you're quoting the standard number and writing about the standard, it has to be the words from the standard only. Mostly.
Okay. Okay, thank you.
Okay. Did you do these multiple choice questions also?
Ma'am, I have one question in illustration 4.
Illustration 4, okay.
So there, I just want to check my understanding. So fixed production overhead, we are taking 10 rupees per unit, right? So 10 rupees into the 4,000 per 4,000 kg is 40,000. So that is what we are charging to the inventory. So
Yes.
remaining 1 lakh 60 will go to our PNL.
It will not like go back. I mean to say, the total capacity, normal working capacity is only 2 lakhs, right? They told that the capacity is 2 lakhs. But out of this 2 lakhs capacity, for now we have only used how much? 4,000, right? It is not that only 4,000 is used. No? It is the remaining units also must have been produced. But by the end of the year, this was left in the stock. So we are calculating the fixed overhead only for the stock that is left over at the year end. We already have produced so many other kgs also. Na? So fixed overhead must have been covered there. Because this is the total capacity. Out of this, only 4,000 was left in the inventory. So we are only bothered about that 4,000 fixed overhead. Rest must have been already covered.
Okay, okay.
Agreed?
Understood, yes.
So these multiple choice questions, did you finish? Yes or no?
No, ma'am.
No, why? Okay, I'll pick someone. Ananya. Are you there, Ananya? Okay, Meenu. Ananya, you're there? Okay, you came back. Okay. Yes, Ananya, can you see the first multiple choice question here?
Oh
my God, your voice is breaking, ma.
Yes, ma'am.
Yes.
Should I read this one?
Yes.
Yeah.
Okay. Which item of the inventory is under the scope of AS2 revised? WIP arising under construction contract, raw material, shares, debenture held as stock in trade.
What is the answer?
Ma'am, raw material.
Why raw materials? Because we have clearly studied the exclusions, May.
Yes,
that
ma'am.
this is an exclusion. Shares are an exclusion. Debentures also, as part of an investment, are an exclusion. So only raw materials is under the scope of AS2. Correct? Okay.
Yes, ma'am.
Meenu.
Yes, ma'am.
Yes, Meenu. The second one.
Material and other supplies held for use in the production of inventories are not written down below cost if the finished product in which they will incorporated are expected to be sold at or above cost, sold above cost, sold less than cost, sold at market value where market value is more than cost. Okay,
So,
so then A option we study that okay, sold at or above cost is first.
option
A, ma'am.
A. We have done a problem also on this, if you
Yes, ma'am.
remember. So I'll show you that part also once. So yeah, this one. When we were reading this raw material car, we have seen that if it is finished goods are sold at or above cost, then raw materials have to be valued at cost, right? You
Yes,
can't
ma'am.
write down the value below the cost. So this is the answer. The third one.
All of the following costs are excluded while computing value of inventories except selling and distribution cost, allocation fixed overhead based on normal capacity, abnormal wastage, storage cost, which is not necessary part of the production process.
This also is an exclusion from the cost of inventories, right? So what is the answer here?
B, I think. B, ma'am, normal capacity, allocated fixed production based on normal capacity. Last time we do one question based study, ma'am.
Yeah, selling and distribution is anyway excluded. Abnormal
Yes.
wastage is excluded. We have studied that. Normal wastage can be included, but abnormal wastage cannot be included.
Yes,
Selling
ma'am.
and distribution is an exclusion. Storage cost also, which is not necessary. I told you storage cost comes with an exception. They clearly told that it is not a necessary part of the production process. So this is also an exclusion. So only thing that is left is the fixed production overhead. Yeah, we know that fixed production overhead have to be included in the value of inventory. So that's the answer. The last question.
Identify the statements which is or are incorrect. Storage cost, which is the necessary part of the production process, is included in inventory valuation. Administration overhead are never included in inventory valuation. Full amount of variable production overhead incurred are included in the inventory valuation. Administration overhead are always included in inventory valuation.
So, which is incorrect. They're asking not a statement that is correct, which is incorrect. So, is the first statement right?
No,
Storage
ma'am.
cost, which is a necessary part of the production. They told necessary.
No,
Then
no.
it should be included in the inventory valuation. So, this is the right statement. Correct? And then
Yes.
administration overheads are never included in the inventory valuation. Is this
No,
statement
ma'am,
right?
it's included, ma'am. Included, ma'am.
Then the third statement. Full amount of variable production overheads. Obviously.
Correct. This one is correct.
Yeah. So which
C,
is
ma'am.
incorrect statement then?
D.
So, okay, and then scenario based questions may. I want you all to try this question, this sixth one. Sixth one, you can try this because this is also the similar kind of a question where you remember the metric ton question, 5,000 metric ton question. We had normal and abnormal wastage. Same kind of a question this is, okay? The input was 12,000 metric ton and each metric ton, this is the cost of the metric ton. And this was the wastage. So you have to split the 630 into normal and abnormal wastage. Can you try this? They're asking you the amount of abnormal loss.
Okay, ma'am.
Okay. I want everybody to try this because we did almost a similar kind of a question. The normal wastage is also given a question, which is 4%. Try this question, right? Now, let's do the seventh one. Seventh question. Let's see what is the information given here. Mr. Mehul gives the information relating to the items forming part of the inventory as on 31st March 2011. This factory produces product X using raw material A. So there are two things here. One is a fixed finished product, which is product X, and you also have a raw material A. Two things are there, right? Okay. What is the other information given to us? The first point is there are 600 units of raw material A. 600 units of raw material A, which is purchased at 120. So this is the cost of raw material. Agreed?
Yes, ma'am.
For raw materials, you will have to check two things, no? What are the two things as per the valuation of inventories? One is the cost of raw material and the other one is the replacement cost of the raw material. Two things. Which one should be included is based on the cost or above cost and all that. But two things are required for raw material. One is cost, which is given, and this is replacement cost. So we have both the informations with us given, right? Okay. This is for raw material. Now, what is the next one? Next one is 500 units of partly finished goods, which means this is WIP. Okay. Now for WIP, this is in the process of producing X and the cost incurred till date is 260, it seems. Till date, you have incurred a cost of 260. These units can be finished next year by incurring an additional cost of 60 per unit. By next year, these goods will be done, not this year. Right? And what is the additional cost required for you to complete this WIP into a finished good? 60 per unit. Okay, good. Now, what is the third one that is given? 1500 units of finished product X. This is finished good. And what is the cost of this? 320 per unit. So we have cost and replacement cost of raw material. We have cost of WIP and we also have cost of finished good. Now, this is what? Expected selling price of product X is 300 per unit. They're asking you to determine how each item of inventory will be valued as on 31st March 2011. Also calculate the value, total value of inventory. What is the first item we have? What is the first item we have? Raw material?
Yes, ma'am. 600 units.
Raw material, what is the name of the raw material? A. Raw material A. So add one more column for units. Okay. Raw material A, how many units we have? 600.
600, ma'am.
Yeah. And we also have WIP. What are the units of WIP? 500.
500, ma'am.
Okay. And finished good?
Finished product, ma'am, 1500 units.
1500. Okay. Finished good product name is X, product X, so I've written that.
Yes, ma'am.
We have written what are the number of units that we have in our stock. Now, we will see what is the cost and what is NRV or replacement cost, depending upon whatever it is. Because for raw material, we have replacement cost. For others, you will have NRV. NRV or replacement cost. Okay. Now, for raw material A, what is the cost? I'm going back to the question. Raw material A, what is the cost?
Rupee 120 per unit, ma'am.
120. And do we have NRV or replacement cost for raw material?
Replacement cost, ma'am, 90 per unit.
Very good. This is 90 per unit. Okay, done. Now let's go back to WIP. For WIP, what is the cost? What is the cost of WIP? Is it given?
260 per unit.
260 per unit, ma'am.
260, correct. 260 is the cost of WIP. Now we will need NRV for WIP. For that, I will do a small working here. How do you calculate NRV?
Selling price.
Accepted selling price of products on 300 per unit.
Okay, expected selling price minus cost to
Minus
sell.
additional cost.
What is the expected selling price here?
300 per unit, ma'am.
Okay, 300. And what is the cost to sell?
60 per unit.
You will have to incur 60 more rupees per unit to finish the WIP into a finished product. So cost to sell will be 60, or I'll write cost to completion.
Yes, sir.
What is the NRV?
240, ma'am.
40. Okay. This is the NRV of WIP. Done. Now, finished product. What is the cost of a finished product?
320 per unit.
320. They clearly told that we have incurred a cost of 320. And what is NRV?
NRV, ma'am, 300 per unit.
300. Because you don't have any cost to sell. Now I will write NRV here for NRV for finished good. Expected selling price is how much? 300. Do you have any cost to sell given? To sell your finished product, you don't have to incur any cost. Nothing is given to you. So your NRV will be 300 only.
Yeah.
Okay. So this is the NRV of finished good. This is the NRV of WIP. So this will be 300. Till here done?
Yes, ma'am.
Yes. Okay. Now our last column will be what? Cost or NRV, whichever is lower. Correct? Now, for raw material, you will have to also see whether cost or NRV, we can't take cost or replacement cost, whichever is lower. Can you do that for raw material? Can you take this or this, whichever is lower? That was not the point that is given in the standard. No, what did the standard say for raw material?
Selling value has to be seen.
The standard told that if the finished good cost is more than the selling price, then you will have to go for replacement cost. Otherwise, it should be at cost. So in this case, cost is higher or your selling price is higher? Which one is higher in this case? Are you all with me? Look at this slide once. What did this standard tell you for raw materials?
Selling price is higher, 300 per unit.
Yeah, they told you can record it at cost only in case the finished good price is more than cost.
Yes, ma'am. Yes,
more than cost. Is it more than cost here? Your finished good selling price is more than cost or less than cost here? Finished good
more than
price.
Cost, ma'am. More than cost.
Less than cost, no? Selling price is more than cost or less than cost here? That is what I'm asking.
I see.
Less, no?
Yes,
this is selling price.
Yeah.
Are you all with me? Confused or
yes, ma'am.
Something is happening? Do you agree that we will have to take replacement cost here and not cost?
Ma'am, here will we not consider the cost as lower of cost or NRV and then take it for raw material, or we'll
for raw
directly?
material, the rule is not cost or replacement cost, whichever is lower. We can't go with that rule. What is the rule for raw material? You will have to check if your finished good cost is higher or selling price is higher. What is higher in this case? Cost or selling price? Which is higher here? In the cost is higher. If cost is higher, then you will have to pick replacement cost. Yes or no? I'll go back to the slide if you want. Clearly read this. At cost, raw materials will be recorded at cost only if the finished goods are sold for cost or above cost, which means if your selling price is 200 and your cost is 150, then it is good. Then you can record your raw material at cost. But did this situation happen in our question?
No, ma'am.
Otherwise, they told it is replacement cost. Otherwise means what? Here, my cost is more than my selling price, right? Which means I am in a situation of loss here. My finished product is not being sold for a good price. It is sold for a less price and I'm into a loss here. So what will happen? I will have to pick replacement cost for raw material. Now agreed everyone?
Yes, ma'am.
Ma'am, I have a doubt, ma'am. Ma'am, here we have to see the cost of the raw material. Only the cost of raw material or all together we have to take, ma'am?
For what, ma'am? For what you're asking? Cost of raw
Like
material.
for to take the like if you order to take the cost of raw material, the
When you're
selling price should
deciding the raw material ka value, you will have to decide whether it is cost or replacement cost, correct?
yes,
But
yes,
this can be decided by the finished good. What
finished
is your
goods, yes.
finished good? Your finished good will be sold for a higher price or a lower price. That will decide whether I have to show replacement cost here or cost here. Okay?
Means we have to see the cost of the finished goods.
Yes, cost and the selling price of the finished good.
Finished goods. Okay.
Yes.
Okay.
Clear? I can repeat if something is missing. Anyone still has a question. I will also show you what is given in the standard here. They clearly told here. You will have to. Can you see this word finished good? Can you see this word finished good here? They are talking about raw materials, but when you are deciding for raw materials, the price of the finished goods have to be checked. Are we okay? Good to go?
Ma'am, I have a
Yes, ma'am.
question. So here,
As we are selling it for loss, we have to go with the actual figure, like
You have
the
to go with
actual
replacement cost.
realization figure of. Yeah,
Replacement
ma'am.
cost. Yes.
Yeah, ma'am. Okay, thank you.
ma'am, in fixed goods, I mean finished goods, when we are taking, so here we are going to take cost or NRV, whichever is lower, as the value of finished goods, right?
Yes. Yes.
So there we will take it as NRV 300. So when we
Yeah.
are saying for raw material, will we consider this 300 which we have arrived at or the original cost?
For raw materials, whether we can't say this or this, whichever is lower. We only have to decide based on the finished product ka selling price and the
Understood
cost.
that bit.
Yeah.
But
And
when we
for
are
these
saying
two,
the,
you will say cost or NRV, whichever is lower only.
yes,
For
so
these two.
cost or NRV, whichever is lower, will become the value of finished goods right now, right?
Value of WIP and finished good both.
Okay. So now my value of finished goods is 300 based on NRV. Correct. So
Let
based
us
on this,
calculate it. Yeah, tell me.
so based on this, 300 is my value of finished goods. So now will I compare my when we are arriving at raw material cost, will I compare 300 is equal to the selling price of 300 itself, so I can take my cost itself.
I didn't get your question. The last part. Can you
So
repeat?
we are taking value of finished goods as 300. Correct. Now, if we go, if we are when we are determining the raw material value, will we compare this value of finished goods of 300 with the selling price?
That is what we have done, no? We
No,
have
but here
compared.
we are taking the cost directly, right? So when we are after arriving at the value of finished goods, lower of cost or NRV, will we take that value and compare it with the selling?
No. We want what is the selling price and what is the cost to just see whether this is higher or that is higher. That's it. But once we have calculated the value, it is no more relating to the raw material. It is the value of that finished good only.
Okay.
Yeah.
Understood.
Ma'am, NRV and replacement codes are same in raw material A, na?
For raw material A, this is called replacement cost. For WIP and the finished good, it is called NRV. Raw
Okay,
materials will not have NRV. They will have replacement cost.
okay.
Okay. So now what is the value that you will have to pick?
Ma'am?
Yeah.
Ma'am, for raw material, we calculate it based on finished good. So if cost is high, then we take NRV of raw material. And
Not
if it
NRV.
is replacement cost.
Yes.
And if it is less finished good, then what we will do? Finished good cost is less.
If cost is less, then you will take raw material ka value as cost only.
Okay, ma'am.
Okay. Okay. Now, should we pick 120 or 90 in the raw material case? 90 or 120?
90.
90.
90, ma'am.
I hope everybody will agree why it is 90.
90.
Okay. And in the second case, for WIP, it should be cost or NRV, whichever is lower. So it will be 240.
Yes, ma'am.
And for finished product, it should be cost or NRV, whichever is lower. Then I will take 300.
300.
Okay. Everybody is agreeing to this, then I will move on. Now, let us suppose a reverse case, just an example. Reverse case, this is 300 and this is 320. Then what will happen?
Then 300 will be recorded.
Then this is 120. Raw materials
120.
will be 120. That is what
Yeah,
I
ma'am.
want to
Raw
tell you.
material should be valued at 120.
That you agree?
Yes, ma'am.
Yes, ma'am.
Okay. Rest will change accordingly, but I just wanted to confirm that part only. Raw materials will be decided based upon the cost or selling price of the finished product. That you should keep in mind. That's it. Rest, I think you can manage, because for WIP and finished product, it is anyway cost or NRV, whichever is lower. So what is the value? Calculate the value, no?
54,000, ma'am.
84?
54.
54, okay.
54.
The second one?
1,20,000.
120, okay.
4,50,000.
4,50,000.
4,50,000, okay. Total?
6,24,000, ma'am.
6,24,000. Did everyone get this value?
Yes, ma'am.
I hope the concept is clear. Writing the numbers is fine, but the concept also should be clear to you. That is what I want.
Ma'am, I have
WIP.
Yes.
Ma'am, in WIP, how 240 is came, ma'am?
In WIP?
240 amount, how it will be came?
How did we calculate 240 is what you're asking?
Yes, ma'am.
Yeah, we have calculated, no? NRV of WIP. Can you see the calculation here? The selling price, expected selling price is 300, and they told that to complete the WIP into finished product, it will require a cost of 60 for me. So cost, expected selling price minus cost to completion will give me NRV of WIP.
Okay, ma'am. Understood.
Ma'am, I have a doubt.
Yes?
If cost is 300 and NRV is 320, I'm not
It's told by the standard, no? What did the standard tell you? If the finished goods are sold at or above cost. Now, what is the selling price? I told you, you're talking about example only, na? Not the actual question.
Yes, ma'am, the example that you gave.
Yeah. So what is the selling price in the example I gave you? 320. And what is the cost? 300.
300.
So here the cost is less than selling price. Yes?
Yes,
So if
ma'am.
you're able to sell for more than your cost, then the value of raw material will be recorded at cost. That is told by the standard. You have to record raw material at cost if the finished goods are sold at or above cost. That is what we have done.
Okay, ma'am. Okay, got it. I have another doubt as well, ma'am.
Yeah.
In work in progress, the cost incurred till date is 260 and additional cost is 60. So why are we not recording that 260 as well, ma'am? Why are we calculating?
Why are we not recording 260?
We are calculating.
260 is the cost, no?
It's a cost incurred.
Yeah. And 240 is what? Replacement cost. Sorry, NRV.
Yes, ma'am.
So you have to pick cost and NRV, whichever is lower. So I have picked NRV because that is the lower value for WIP.
No, ma'am, that I'm able to get. In the site calculation, cost to completion, we've added 60 rupees.
We didn't add, we removed 60 from
We
site.
removed 60, but the additional cost incurred till date is 260, right? Why are we not adding that along with the 60 here?
260 is already recorded, no, in your books of accounts. Cost means what? It must have been already recorded in your books of accounts, 260. Yes or no?
Okay,
When
ma'am.
someone told you that this is my cost, it means it was already recorded in the books of accounts. Now, once the replacement cost is 240, I will just have to bring down the value of inventory. That's it. 20 rupees I have to bring down.
Okay, ma'am. So it's already recorded.
260 is already recorded. This cost to completion of 60 is there, no? This one. You will not record this now. Why? They told this will be incurred next year. This is not incurred in this year. This will be incurred in the next year. We are just expecting what will be incurred in the next year and doing this calculation, right? So this 60 though we will not record. We will record it next year only when we are actually manufacturing that WIP into finished good.
Okay, ma'am. Okay,
just for calculation purpose.
Okay, ma'am. Got it.
Clear?
Ma'am, could you please explain in short the logic or reason behind keeping that rule, cost or NRV, like in order to while actually while dealing with the P&L, like the stock is shown in the P&L, right? In order to like if they show higher figure, the profits will be reduced. That's the key reason, right, ma'am?
It is like, I don't want to show the value higher. Prudence concept. What will prudence tell you? You expect losses but don't anticipate any profits, correct? Now, I have my inventory.
Yeah, ma'am.
Let it be any inventory, raw material, WIP, finished good, let it be anything. Now, I thought that to manufacture that particular inventory, it will cost me some 100. Okay?
Yeah, ma'am.
Now, when I went to the market, I realized that in the market, the product is not having that worth. When the product is not having that worth, I can't still show that 100 in my books of accounts because to have that excess amount recorded in my books of account, it will not give me the right profit or right representation of my inventory. So that is why they have brought this rule that cost or NRV, whichever is lower. Lower, why? Because you be prudent enough. If the value is existing in the market, good, don't show more. If the value is not there in the market, but you reduce it. That is what it means, cost or NRV, whichever is lower. Cost, though, anyway, we have to record.
Okay.
Yes, we can't ignore that. But if in the market, it is available in the market, it is having a good price, then fine. You show it until cost. But if in the market, if the value is down, then you also reduce the value so that it shows a good picture in your financial statements. You are not overstating or understating your profits. That is what it means. Why cost or NRV, whichever is lower.
Okay, ma'am. Thank you. Ma'am, but while dealing with these raw materials and all, in costing will while dealing with the process costing will bring down all this raw material work in progress to equivalent product per unit, right? As per costing standards. Like the reason behind different treatment is those are not actual figures and these are actual ones, right? Those are budgeted ones.
It is that in costing, what is the purpose of costing? To know what is the price of that particular product per unit or total cost. They are not concerned about overstating or understating profits and showing up in your financial statements. But when you come to accounting, what happens? Showing the fair representation in your financial statements is more important. Correct. There, you need to know what is the actual figure. I need to know what is my total cost. So when costing, what we will try to do, what is the cost of that particular product? I need to calculate that. How it is. Now, someone told you that cost of raw material is 120. How did they calculate? That 120 was calculated by using costing techniques only. Yes or no?
Yeah, ma'am.
So this 120 or 90, which have to be shown, will be decided by accounting standards. Okay? How to calculate will be told by costing. But what to show in your books of accounts? What is the correct picture of your financial statements? Which figure, if you show, it will give you a true picture of your financial statements, will be told by the accounting standards. Costing is only for calculation purpose of per unit or total value or the valuation involved there.
Okay, ma'am.
Got
okay,
it?
ma'am. Thank you. Yeah.
We just have one last question in this inventories. Let's finish this. Very small question. Quickly read this question, all of you. So what is given here? Alpha Limited sells flavored milk to customers. Some of the customers consume the milk in the shop run by the Alpha Limited. While leaving the shop, the consumers leave the empty bottles in the shop and the company takes possession of these empty bottles. So they're selling milk here. And then the customers who are buying these milks, they're leaving the empty bottles also near the shop itself. Few people are leaving it. So what is the company doing now? The company has laid down a detailed internal record procedure for accounting for those empty bottles which are sold by the company by calling for tenders. So they're calling for tenders because they're collecting a lot of empty bottles. They wanted to call for tenders, and then they wanted to have a record procedure of accounting these empty bottles. They wanted to have a clear procedure of accounting because this is also part of their product. Now, they're asking you to decide whether this inventory of empty bottles is an asset to the company. And if so, whether the inventory of empty bottles existing as on the date of balance sheet is to be considered as inventory of the company and valued as per AS2 or to be treated as scrap and shown at realizable value with corresponding credit to other income. So the question here is, should you treat this as an asset? Should you, do the accounting as per AS2 or treat it as a scrap? Will it be an inventory or a scrap is the question here. Now, to decide whether it will be an inventory or not, first you need to assess whether it is an asset. Is it an asset to the company? Or is it some kind of a material that is going to generate some future economic benefits to you? That we will have to check, right? Now, when probable future economic benefits are flowing to the organization, it is an asset. Do you have any future economic benefits that flow into the organization because of this empty bottles? Yes, because they're also calling for tenders, which means they actually have a procedure to have such future economic benefits coming into the organization. So yes, this will be an asset. But should you treat it as an inventory or should you treat it as a scrap value? But when will you treat it as an inventory? When it is used in your business, right? For sale, or when you are using this as part of your ordinary course of business, then it is called as an inventory. Are they using this as part of their ordinary course of business? Yes. So this can be treated as an inventory and you need not scrap it because it is coming as part of your business and you are also creating a procedure for it, calling for tenders and all that you're doing. So it is like a part of your business in your daily routine business. So this can be treated as an inventory as per AS2. Right? Any questions still here? Inventories. So we have seen the meaning of inventories. What is the meaning of inventory as per AS2? Then we have seen what are the different types of inventories. Then we have also seen what are the exclusions from the scope of AS2. These are excluded because these are either covered under some standard or these cannot be valued as per AS2. So these are excluded. And then how to measure the inventories. Raw materials will have a different way of measuring. Finished goods and WIP will have a different way of measuring. Finished goods and WIP, lower of NRV or cost. For raw materials, you'll have to see what is the finished good cost or selling price, and then decide whether it is cost or replacement cost. Then we have seen how conversion cost will be calculated. For conversion cost, you need to check for the overheads, material cost, labor cost, and fixed and variable overheads, all of them. Then we have seen these specific identification method, FIFO, LIFO, and weighted average, also the adjusted selling price. And last way, we came to the disclosure parts, wherein two types of disclosures have to be made. One is about what are the accounting policies that we are adopting and the formulas that we have used. And the other one is the classification of the inventory. What are the different classes of inventories that you have? That's like the summary of AS2 that we had.
Excuse me, ma'am.
Yes.
Ma'am, explain that fixed overhead. Ma'am, that one slide again.
Which
Act-
one?
Actual capacity and
The problem that we have done yesterday.
no, ma'am. Ma'am, one slide.
This one?
Yes, ma'am. Not this one.
This
This
one?
one. Yes, ma'am.
Yeah. Fixed overheads we have seen yesterday. It should be at normal capacity or actual capacity will depend upon if it is higher or lower. If you
Ma'am,
remember that, this part is clear, no? Fixed overhead ka?
ma'am, you told me why we are calculating that answer I want.
Why we are calculating matlab?
Means why we are calculating fixed overhead at higher and
Higher
and ma'am means why and variable cost at actual why we are doing this.
variable cost, it is actual. It is because how much ever you incur only, if you are doing production, you will incur variable cost. So it will be at actuals only for sure. Because if you are producing 100 units, only 100 units ka variable overhead will be incurred. So it has to be at actual. But fixed overhead, if it is at normal capacity or actual capacity, will depend upon how many goods did you produce or how many units did you actually produce. If you're producing more or if you're producing less, if you're producing more, what will happen? You can't record more, right? If you're producing more, you can't record more because you have produced more. Then what will you do? You will stick on to the actual production. But if you're producing less, then you stick on to the normal capacity only. Because finally my target is what? To record the entire fixed overhead. That's it. Whether it is the actual or normal capacity, entire overheads have to be recorded. In what way I will record will depend upon whether I'm producing more or less. This you will only understand with the example that I have told yesterday. You
Yes,
revise that
ma'am.
example again.
Ma'am,
When you
joint
have,
cost also, ma'am, please explain.
which one?
Joint cost also.
Joint cost, and in this joint cost you will have both joint products and byproducts. When you have a joint product, which means two products are combinedly produced, okay, in that case what will happen? At some point you will have a separation, no? When two products are produced together, at some point you will separate them into two products. So what is the sale value at separation point? That is what I want, because after separation only I can sell them. Now I gave some input, and that input will give me two products. When will I know that two products came out? At some point of separation, two products will come out. That point, I will sell those products. So what is the sale value at that separation point? I need that. Okay. Or
Okay.
sale value at completion. Sometimes what will happen is I can't separate them. I will only get the final output, then I can sell them. So if you can separate them in between, then you see what is the sale value at separation point. If you can't separate them, but finally the two products, when they're coming out, you can sell them, no? What is the selling value at that completion point? Either you can take that or this. If you know the separation point, fine. If you don't know the separation point, take the completion value. That is for joint
Then
products.
if we are not separating, then we will measure at NRV.
That NRV is for byproducts. Byproducts is different. Byproduct means what? Now, when I gave some input, I'm expecting product A and B to come out. Okay. I
Yes,
gave
ma'am.
raw material X. I expect that product A and B will come out. I know that these two only will come out. But suddenly what happened? Product C came out. Okay. As a scrap. What happens to the product C? It will not give you in bulk. It will be like in small quantity, it will come out. Such kind of a byproducts are also sold in the market, right? Now, product C came out of it. I can't ignore that. I will also sell it. Now, when I'm selling that kind of a product C, I will make some amount out of it. So that is measured at NRV. It is not the product that I wanted. It came out as a byproduct. While the process was continuing, there was a small product which came out. That is called as byproduct. For that, you will measure it at NRV.
Ma'am, in joint product, you said first method that we separate. So at what price we will measure that one? Separate one.
Yes.
And in combined, if
In
we are
combined,
not separating,
it is not that it is not separated, ma'am. Let me Can you see my whiteboard?
Ma'am, no.
Ma'am, please explain joint and byproducts by an example.
Okay.
Yes, ma'am.
Okay. Can you see my whiteboard?
Yes, ma'am.
Okay.
Ma'am, joint product is intentional and byproduct is
Sorry, can you repeat? Someone is talking, I can't hear, or they are not able to.
valuing
No, your voice is breaking,
in
please.
this way.
Your voice is breaking.
Planning to manufacture two products, right? And coming to byproducts, like it is unintentional, like it's ma'am, joint product to manufacture two products, right? And coming to byproducts, it is unintentional and it is through natural process. We got two products and we are planning to sell in the market.
Yes, you're right.
That is the reason why we are taking. Yeah, ma'am. Okay, ma'am. Thank you.
Okay. Now I have given an input of material X. Okay. Now I know that I will have a output which is product A and B. Okay. This is what is my expectation. Now, what is the separation point is, suppose inputs are given, they will be under process and then output has to come out. Correct? Now, at this point, it is called separation. This is the point of separation where the inputs are broken into two products. Okay? This is called separation. Now, at this point, if you are able to sell this product, if you are able to sell these products, then see what is the sale value at separation. But if you don't know the value at this separation point, then what will you do? Then again a little process is done, then product A will come out. And then a little more process is done, product B will come out. Right? At this point you can sell, no? Once the product is ready, you can sell, no? Now what is the sale value at this point? Either take this or this. At separation point, the products will not be completely ready. You just broke them. After that, again process have to be done. Okay. After that process, the complete finished good will be ready. This you can sell. So either you take the sale value of the completed products, or at separation point, if you can sell them, take that sale value. This is clear now. Joint products, separation point and the completion point.
Means from separate we will take its sales value in separation.
Yeah.
And
At
in
separation
combined, we
point,
will take separation of both the two.
yeah, at separation point, product A is WIP only. Agreed? Because still process have to be done. Can
Yes.
this WIP be sold? If it can be sold, then what is the sale value? If cannot be sold, then wait until completion and then have the sale value.
Okay.
Got it?
Yes,
Ma'am, what's the reason that why manufacturers sell at separation point?
I'm sorry, what?
Why manufacturers sell the WIP at the separation point?
At
What's
this
the
point,
reason?
okay. At this point, we will sell because, if the process is involving me a cost of 100 per unit, let us assume, okay, this process. Till here, I have already incurred rupees 120 per unit. And if I have to further process, it will require me 100 per unit. Total, what is the cost I have incurred? Almost like 220 I have incurred. Yes or no?
Yes, ma'am.
And when the final product is coming out, I can sell this only for 200 per unit. Oh, okay. This is the sale value. Now, do you think anybody will be interested to do this further process and sell it for 200, which is like into losses? Nobody will be interested, no? So I'll think better I sell it at this point so that at least I will have some profit. 80 rupees profit will be left, no? So I will sell it at separation point only. But all the products cannot
Without
be sold
further
at separation
processing. Yeah, ma'am.
because it is almost into WIP stage. All the products cannot be sold, but few products can be sold.
Ma'am, can you please give some examples that
I'll
what
give that
products
here.
can be sold at separation?
Yeah. Now someone was asking about byproduct also, no? The same example, when I gave material X, product A and B are expected to come out as output, but as a byproduct C also came. Okay. This case, this byproduct will be mostly sold for NRV because this is almost like a scrap. Okay. The best example is jaggery. Okay. You put in jaggery, you get sugar out of it. Correct? As a byproduct, what comes out? You know this wax, or I think it is also called some other wastage also will come out of it. There's a name for it. I think it is molasses or something. So this is also some kind of a wastage that comes out of this sugar and sugar cane. Okay. So what will happen? These byproducts also can be sold. The main product is what? Sugar. This is what I want. From the sugar cane or the jaggery that I'm inputting, I want sugar. That will come out. This I can sell. But I can also have a wax or the molasses kind of a byproduct, which also can be sold at a scrap value. These are like, this is like the wastage, or this is like a byproduct, which will not come in a big lot. They will be in a smaller lots only. I mean, smaller quantity. Clear? And teaching costing also. I feel that now. This is costing. Anything else? Okay.
Ma'am, so this sale value will be the cost of the joint product. This sale value will be the cost of joint product.
For what? For which one?
For joint products where we are determining the sale value at separation and sale value of
Yeah.
completion.
You
So
can either
that will
take
be
the
the
sale
cost.
value at separation or sale value at completion for a joint
Okay.
product. Yeah.
So that will be our cost when we are
Yeah. That will be our cost. Yeah, we are deciding what is the joint cost. No? Yes.
Okay. Okay.
Okay. I'll take a break, and then we'll start next standard, which is PB, property, plant, and equipment. Right. I hope I'm clear with AS2, valuation of inventories, wherein we talked about so many things. Just have a look at the questions again, redo them. Any questions we can discuss later. But after break, I'll start PP. Okay. Technical team, can we break? Okay, be back by 10 minutes. Okay. Are you all back? Are you all back? Just confirm.
Ma'am,
Yes.
I have a doubt. Like in the examination, when we will answer the questions of inventory, so firstly we will mention it that this is according to AS2 the things which are, and then we will give a kind of a extra explanation from our side in our own words. So is it going to be applicable? No?
Yes, yes. You can write what is the standard talking about. Then, if needed, you will explain. If the standard itself will tell you the clear explanation, cost or NRV and all those things, then it is fine. But if you have to talk something relating to the question, then mention the question and then mix your explanation into it and conclude it.
Okay, okay.
Okay. It is for any standard, not just inventory standard. Any standard you can do that.
Okay, ma'am.
So we finished the AS2 and I'm starting AS10, which is property, plant and equipment. This is also asset-based standard. So here, same logic. We will first see, what is the definitions, any definitions or, the meanings that are given by the standard. Then we will see what is the recognition criteria, how do you measure a PPE. Then we will see how to recognize or de-recognize. And here, extra thing will be about the depreciation, because when you're talking about PPE, depreciation is also part of PPE. The standard talks about depreciation also. Different methods of depreciation and all that will be talked about. And then finally, the disclosure part. Right. So now, the first one is the objective of AS10. Why do we have this AS10? Right? AS10, property, plant and equipment. Before it used to be like a fixed asset, but later they have added this word property, plant and equipment to cover all the assets that are there under fixed assets. But for intangible assets, you have one more standard. There is a different standard for intangible assets. So this standard only covers about the property, plant and equipment party. Now, what is the main objective of this AS10? It is to prescribe the accounting treatment for PPE. Now, someone is, purchasing a property, building. So how should they show? Should they show it at cost? If they have to show it at cost, what are involved in cost, right? If they want to provide for depreciation, how to calculate depreciation, right? All these things are prescribed in the accounting standard, wherein it will tell you clearly everything about PPE, how to record for, how to recognize, how to de-recognize, when to recognize, or what value to recognize. Everything is clearly mentioned in the standard, right? And the other main objective is to help the users. Who are the users of financial statement? I think this is a very basic question. I want someone to answer. Who are the users of financial statement?
Ma'am, investors.
Yes.
Creditors, public.
Okay.
Management.
Okay.
Stakeholders.
Employees.
Stakeholders is one word which we will use for all of them together, right? Stakeholder means all the users will come. In that, we will have different persons, shareholders, then you have creditors, you have debtors, you have employees also. Yes. You have management, you have public, you have unions, some unions, you have government. A lot of people come under this stakeholder ka concept or users of financial statement. So who are users? Matlab, there are a lot of people, which means I am using this financial statement to come to a conclusion. Correct? If suppose I am an employee, I wanted to use this financial statement and come to a conclusion of what? Employee looks at the financial statement in a different perspective. The shareholder or the investor looks into the financial statements from a different perspective. Government will look into a different perspective. Everybody doesn't look at the entire financial statements, or everybody doesn't want the entire financial statements also. Right? Everybody has their own perspective. Now, if I am an employee, what will I look at? I wanted to know what is the profit. Well, I wanted to know if you will be able to pay my salary on time. Are you able to earn profit, or are you able to earn revenue? Will you be, existing in future or not? That is what I am concerned about being an employee. But when you talk about a shareholder, what is he concerned? He is concerned about what are the profits that you're earning. Are you able to, suppose I have invested 1 lakh, how much am I going to get back if this company is running good or not? That is the perspective of a shareholder. And government will look at how much taxes you will pay. So everybody has their own perspective. Creditors, debtors also will look at your liability position, or your credibility position is looked at, and all those things, right? So each person or each user of the financial statement has their own perspective. Now, when you're talking about the users, I told you this part, but here the PPE is helping, or the standard is helping the users of financial statements to understand the information about the investment in PPE and changes in such investment. Which means what? How is the company, or how is that business making an investment in PPE? Is it a right investment, or is it a kind of an investment which is worth or not? Or if they're making any changes to such investment, how are they changing it? If they're changing the method, or if they're changing the way they're valuing it, how are they doing all these things? That information, who will know that information? If I am a normal layman, I will not understand all these things, right? But the standard has that objective. It's in a way, it is giving you such kind of an information in your accounting standard, right? One is to one from the perspective of the company, we can say, for you to know how to record for, or how to do the treatment. The other is from the perspective of the users of financial statement, for them to understand about what is happening in the investment of PPE, and also if there are any changes in such kind of investment. That's the main objective of the accounting standard 10 PPE. Now, we also have some principal issues in this accounting for PPE. One is the recognition of PPE. The next one is depreciation, impairment, and determining of carrying amounts. I told you all these also, right? Or we can say these are the main things that are discussed in this PPE standard. How to recognize, when to recognize, what value to recognize when you have purchased some PPE, and how much is the depreciation that has to be charged. And if you have any impairment loss, how to record the impairment loss, and what should be the carrying amount. Because carrying amount are something which are on the face of your financial statement or the balance sheet. In your financial statements, in the balance sheet, the face, the face of balance sheet, what is the value that is shown? Your balance sheet, I will show property, plant, and equipment, value of 10 lakhs. But how did I get this 10 lakhs? This is the carrying amount. How did you calculate that 10 lakhs? Is what is the standard talking about, or how to calculate this? Whether should I include depreciation, what cost minus depreciation or impairment loss? What is the process? How to do that? All that will be determined in the carrying amount, and that is also discussed in the standard. These are like the principal things that are talked about in the accounting for PPE.
Ma'am?
Yes.
I didn't get the carrying amount. Can you please explain once again? And also, what's this impairment loss?
Impairment loss, we have a standard also for this. Impairment loss impairment standard is there. It will be discussed in detailed there, because if I start, it will take a lot of time. So I'm not starting what is impairment loss. It is a kind of loss because the asset, has a decrease in value. You'll have an impairment loss. For now, you understand that it is a kind of loss for the asset. Okay. More details we will see in the impairment standard. Right?
And please explain this carrying amount
carrying
once
amount,
again.
right? Yeah. So when you're talking about carrying amount, let's just give you an example. Now you have a cost of some building. Building is costing 10 lakhs minus depreciation for year is some 1 lakh. So what is the value? 9 lakhs. This
Yeah,
is
ma'am.
called carrying amount. This is called carrying amount. This value is shown in your balance sheet. PPE, you will show building 9 lakhs, carrying amount. So on the face, what is given? Only carrying amount. But how did you get this 9 lakhs? The calculation will be given in the notes to accounts. Okay, is depreciation involved in that? What is the cost involved in it? And how did you arrive at the carrying amount? Is all given in the notes. On the face, we will not show anything. On the face, we will only show the carrying amount or the final figure. Fine?
Yes, ma'am. Got it.
Okay. Now I told you, any standard, we also should discuss about scope, right? So this standard is not applicable to biological assets other than bearer plants. Now you will ask me, what is a biological asset? What is a bearer plant? And all these things we will discuss. We have definitions of each one of them given in the standard. We'll discuss that. But for now, what is not covered under the standard is biological assets, right? Excuse me. So one is biological assets are not covered except the bearer plants. Bearer plants are covered under the PPE standard. The other thing that is not covered is these mineral rights, exploration, oil, minerals, and natural gases. This we have seen yesterday also. If you remember, these kind of things we have seen in inventory. AS2. AS2 also we have seen, right? It is not covered there. It is not covered here also as a part of PP. These are like the wasting assets. All these mineral rights, the oil extraction things. Why are these not covered? It is mainly because this is completely based on extraction. Yes or no? All this oil, natural resources, and all are based on extraction. When something is based on extraction, or we can also say these are like the depleting resources, right? Once you start extracting, they will deplete. So when you have such kind of an extraction based assets or depleting resources, it is very difficult to calculate the cost, or it is very difficult to see what is the revaluation, because this PP standard will tell you cost model, revaluation model, depreciation. All these words we cannot apply to all these wasting assets because these are mostly based on extractions and depleting resources, right? That is why it is excluded. And why biological? What is a biological asset? I'll tell you, don't worry. But why biological assets are excluded is these are also based on, fair value. Okay. So now what are biological assets? Biological assets means, suppose you have animals. Okay. You have plants. All these will require what? Biological transformation. If you have a cattle, okay, if you have cattle of shepherds and all these animals and all, what will happen? Suppose you have purchased them at at year end, or you have purchased them today, they were some 2 years old. After 1 year, what will happen? They will turn into year 3. Like these are not like such kind of units that they will stay in your inventory, or these are not like such a kind of an assets that they will stay with you without asking anything. They will grow, they will have a biological transformation. If you have planted a tree also, it will grow, right? They will have a biological transformation. When such kind of a biological transformation is there, what will happen? When you have purchased, the cost might be, let's suppose, when you have purchased it today, the cost is 1 lakh. Okay. Now, after 1 year, what happened? This 2 years car, one pig we have purchased. Now, after one year, this pig will be 3 years old pig. This 3 years old pig will cost a different price, maybe 1.2 lakh. Now, can I say cost or replacement cost? All these will not be valid. I will only have to take what is the fair value that is existing in the market. What is the value of a 3-year-old pig in the market? I only need that, which is a fair value. So I can't go with this PPE standard, which is talking about cost, revaluation, depreciation, and all these things. That is why biological assets are excluded from the standard. Are we clear? Yes or no? Is my voice breaking?
No, ma'am, we're clear.
It is clear, no?
Yeah.
Alright.
Yes, ma'am.
See some message that my voice is breaking. Okay. Good. So we have seen two exclusions from the PPE standard. One is the biological asset because of its biological transformation that it has. It has to be mostly valued at fair value. That's one reason for biological assets. And also the wasting assets, because these are based on extraction and these are like the depleting resources. These two are not covered under the PPE standard. This is the scope of the PPE standard.
Ma'am, in biological asset other than barrier plant means?
Bearer plant we'll discuss. We'll discuss bearer. What are bearer plants? We'll discuss. That is covered under PPE standard. We'll discuss what is a bearer plant. We have a definition here. See, biological asset ka bearer ka. We have definitions. We'll discuss. Okay. Now I'm going to definitions. We'll see what the definitions of one by one definitions. The first definition is PPE. Since we are discussing PPE standard, we will need to know what is the definition of PPE, right? So the first condition, there are two conditions that have to be satisfied if you have to meet the definition of PPE. The first one is it should be used in the production or supply of goods or services, or for rental or for administration purpose. This is the first condition. Either it should be in your production or supply, right, to manufacture goods or services, or you must have given it on a rental purpose to others, or it should be used in your administration purpose. Administration purpose means you use it in your office, right? There's a building, you're using that building for selling and distribution, advertising things and all. That is an administrative purpose, right? Or you're using a building for marketing. That is an administrative purpose. So you're using that asset. Suppose there is a machinery. You're using it to produce goods. That is a PPE. If you have a building which you have given it on rent, that is going to give you future economic benefits. So that is a PPE. Like this, either it should be used in your production or supply, either it should be given for rental, or it should be used as an administrative purpose. If not, it is not a PPE. That is the first condition. And the other condition everybody knows, it should be used for more than 12 months. If you're using it for less than 12 months, then it is not called a fixed asset. No, it will be called as a current asset. Agreed? What is a fixed asset or a non-current asset? Mostly when the purpose of that asset is to use it for more than 1 year, more than 12 months, only then it is called a non-current asset, right? So PPE is, the other condition is you have to use it for more than 12 months. If you're using that asset for more than 12 months only, mostly it is treated as a PPE. So the definition of PPE will have two conditions: the usage, or what is the purpose of that asset, and for how many months are you using that asset. These are the two conditions that have to be satisfied to meet the definition. Clear? Definition of PPE is clear. Two things to be remembered. Yes.
Ma'am, if it is given on a rental basis, it comes under separate business, right? Like, how can we classify it as a PP?
It is also an asset to you, no? It is giving you future economic benefits, no? It is giving you future economic benefits.
Okay.
So it is an asset
Yeah,
to
okay.
you. That is the purpose. Because these are accounting standards, all these are combined. But if you talk about Ind AS and all, then you have separate standards for everything. If it is used for rental, then you have Ind AS 40, property, investment property.
Okay, ma'am.
PPE, you will have a
Okay,
different
thank
standard. And also, these wasting assets also, we have an Ind AS. Ind AS 106 talks about these wasting assets. These biological assets, bearer plants has Ind AS 41. So everything has a different standard when you're going to Indian accounting standards, right? Each one of them. And inventory. Inventory is one, PPE is one, agriculture is one, wasting resources has a standard. These rental purpose ka assets go different standard. Lot of standards are there when you're talking in the perspective of Indian accounting standards, but we are not talking about India. So we are simply talking about accounting standards. Accounting standards means these are mostly used for the purpose of a sole proprietor, right? It's not for the companies anymore. So it's mostly kept simple. Okay. I hope I'm clear. I'm moving on. that question. Okay. Now the definition of the biological asset, right? Like I already discussed, biological asset either it can be a living animal or a plant. Living animal like the pigs, pigs because mostly they're used in your business, or any other animals which are used in your business. If your business is that, then you keep using these animals and plants, right? Plants like you have you have these wheat and all those. If your business is that, then obviously you will have to treat that as a part of your asset also. So whether it is a living animal or a plant, it is called as a biological asset. Mostly it should involve biological transformation. Biological transformation is involved, then it is called a biological asset. Right? Living animal is not covered under the standard PPE. Plants are also not covered, but exception to this rule is what? Bearer plants are covered. Right? Bearer plants are covered under PPE standard. But other than this, any other plants are not covered under PPE. So all biological assets are not covered except for bearer plants. What are bearer plants? Now let's see that. Look at this. Now, what is a bearer plant? It has to satisfy these three conditions. Used in production or supply. It is expected to bear produce, has a remote likelihood of being sold as an agricultural produce. Now, I think, after reading this, you will feel, what is a bearer plant and all those things. I'll simply give you an example. You all know grapevine? Are you all there?
Yes, ma'am.
You all
Yes,
know
ma'am.
grapevines? Rubber trees? Yes
Yes.
or no?
Yes, ma'am.
Oil palms? You must have heard all these, right? Are all these plants? Is rubber a plant or no?
No.
It's not a plant. Right? Why not a plant? Coffee plantation. All those are trees only, no? They're not trees, huh?
Yes, ma'am.
They're trees now. I don't know. I thought till now they were trees and plants. They're not. Grapevines, rubber trees, oil palms, all these are trees only, na? They are a biological asset. Yes or no?
Yes, ma'am.
Somehow I am in shock. Some people, are you all sleeping? Please wake up, wake up, wake up. Good morning, good morning. So everybody's there?
Yes, ma'am.
Yes, ma'am.
Okay, good, fine. Now, the best example is grapevine or the rubber tree. What happens in these plants? Now, when you plant a rubber tree, do you think this rubber tree will give you the produce? What is the produce out of the rubber plant? Rubber?
Rubber.
So, rubber.
Yes, ma'am.
Rubber comes out of the rubber plant. Now, this is the produce, agriculture produce, right? Do you think this rubber will come in just 1 year? In just 1 year, the rubber comes out of the tree? Do you agree with the statement?
No, ma'am.
No, ma'am.
No. What about grapevines? Even the grapevines also, they will take almost 10 years, 20 years. The rubber trees also, even the oil palms, coffee plantation, all these will take years, right? To give you a produce, they will take years. That is why these are called bearer plants. Okay, we are segregating plants into two things. Okay, I'm segregating plant into two things. One are the normal plantations, any other plantations, and bearer. Now, what happens to this bearer plants? These are mostly taking more than 1 year, or we can say, very huge time to give you an agriculture produce, or that. Please mute yourself. No, someone is talking. You have question, okay? Otherwise, mute
On
it.
some background noise.
Yeah. Please mute yourself. So these bearer plants will mostly take not even just 1 year, they will take lot of time to give you an agriculture produce or give you an output out of it. But normal plants are what? Suppose you have these wheat, wheat, maize plants, and all these. They will be done mostly in 3 months, 4 months, 6 months. Few plants, if you see the vegetables car, they will all be done within 1 year. No, you just plant them, they will give you the output. Wheat also mostly it will take some 6 months, and it will give you the output. Maize, all these things, any vegetables or mostly the wheat and all will give you the output within a year. Those are all normal plants which are covered under biological asset and not covered under PPE. Correct? And what are bearer plants? These are some plants which will give you the agriculture produce, but it will take a lot of time to give you that agriculture produce, more than a period of 12 months for sure. And they will not have any incidental scrap sales, which means what? They will not give you any kind of a agriculture produce that you can sell it in scrap. Okay, it will give you a huge product. Rubber is a huge product that can come out only after you wait for a lot of years, right? Such kind of plants are called bearer plants. They're used in production or supply. They should have a bear produce. They're expected to bear produce, and also they're not likely to be sold as an agriculture produce, right? Very, very likely to be sold as a scrap. Is this clear?
Ma'am, in the third point, basically it says that those bearer plants are those plants which will not generate any kind of scrap and it can't be sold in the market.
It can't be. The produce can be sold. It can't be sold in the form of a scrap.
Okay, the scrap form can't be sold. Okay.
Understood? The difference between a normal plant and bearer plant, if you understood, then I think it should be clear. So is
I'm comparing biological assets and bearer plant, like it is quite opposite to biological assets, right? Coming to bearer plant, like it goes in a long term and
yes,
scrap
agreed.
cannot be sold. Okay.
Yes.
Yeah, ma'am.
That
Okay,
is why
thank you.
biological assets and the bearer plants are mostly separated. Though you cannot say rubber is not a biological asset. No, rubber plant is also a biological asset only because it also needs a biological transformation. But we are separating them and naming it as bearer plant because the form or the process they take to give you an agriculture produce is a time taking process, or it is a kind of a
Yeah,
different
ma'am.
process.
Genetical growth is common.
Yes, common. It is a biological
Transformation is
asset.
common. Yeah.
Yes, but still we
Yeah.
are separating them because the feature almost look like what it is taking more than 12 months. It is giving you an agricultural produce. It is like the future economic benefits you will have out of it. So almost the conditions look like it is an asset to you. Correct. But if you look at these will not look like an asset to you, or they're looking like an asset also, therefore less than 1 year or so. That is why these are mostly not covered under the PPE standard. But like I told you, since it is accounting standard, we have everything combined in AS10. But if you are going to Ind AS, then you'll have different standards for agriculture and all those things. So don't worry about that. But for now, you know what is a biological asset and what is a bearer plant. Biological assets are not covered under PPE. Bearer plant exception is bearer plant, which is covered under PPE. Am I clear?
Ma'am, I have a small doubt. That is, in bearer plants, scrap cannot be sold or can be sold, ma'am?
Yeah, mostly it is not sold as a scrap. The
Okay.
produce, the only rubber plant will give you rubber. It doesn't have any scrap sales, no? Like we have for few units, like we were discussing about sugarcane and all those things. What happens? You will have the scrap also. With scrap scales, sales also can happen. Such kind of a thing will not happen for these bearer plants. It will either give you the agricultural produce after this many years, and then you can sell it. You can sell the agricultural produce, but it won't give you any scrap sales in between.
Okay, ma'am. Thank you.
Ma'am?
Yes?
Ma'am, if that bearer plant gets kind of a like it kind of a get in a condition which can't be sold, so then we can just destroy it and we can just sell it in the market.
Yeah, the produce only can be sold, no? Only the, I mean, output, whatever it comes. If it is rubber plant, rubber. If it is grapevine, then the grapes that come out of the grapevines. Only those can be sold. No? Wines cannot be sold. Grapevines cannot be sold, but you can sell the grapes out of the output. That way.
No, actually,
They're
I
just
got
giving
the
you a
point that
produce.
scrap cannot be sold. I just wanted to ask that if that bare plant is not in a condition to be sold in the market, so for that, if for any reason it can't be sold in the market, then we can just destroy it. The producer can destroy it and just sell it in the market as a scrap.
Yeah, like small scrap sales can happen. Sometimes it is like you have to completely make the surrounding, the land has to be ready for the next production, so few things will be sold. That happens, that is fine.
Okay,
I mean, incidentally you don't get all those scrap, wantingly you won't get it, but as a part of the wastage and all, that generally happens in any business.
Okay, ma'am, understood.
So, ma'am, biological acids are
Ma'am,
Yes.
living animals and plants.
ma'am,
And
like the example of grape and the rubber plant, we can also include the banana tree in it.
Banana trees are not, for more than 1 year, as far as I know. Not too much into agriculture, but banana trees are mostly, giving you an agriculture produce within 1 year. I think it will just take 6 months or something, if I'm not wrong.
Yes, ma'am. But ma'am, when they destroy it, they also like regrow itself. Like if we cut their stem, like so, it can include in also beer plant, huh?
But you remove the
Because
entire wastage and plant them again, no?
mm, yes, ma'am.
Hmm.
Okay.
Okay. So we have seen the definitions of
Ma'am,
BPE. Yeah.
ma'am, once again, just give a recap, give a difference between burial plant and normal. I'm little bit confused while all question means once just recap.
After listening to the doubts, you got confused. Huh? So people are thinking so much that they're making others confused again now. Okay, you have these brinjal plants. Okay, that is also plant, brinjal plants, correct? These brinjal plants will take hardly 1 month to 2 months to give you the brinjals. Yes or no?
Yes, ma'am.
Yes. This is a normal plant. Okay, normal biological asset, which is a plant. That is
Oh,
clear.
yes,
But
ma'am.
it is not taking more than 1 year. First condition. That is the first condition. It is not taking more than 1 year. But when you come to the bearer plant, what happens? For them to give you a output, like output, matlab the produce whatever it should give you. Wines, grape wines, so they should give you grapes, right? Grapes will only come to your hands after 10 years. The grapevine has to grow. It has to start giving those grapes. It will almost take 10 to 15 years, right?
Yes, ma'am.
That case, what will happen? In for that 10 years you are holding that asset with you, and after 10 years you will start receiving the income out of it. If you're doing a grapevine business, what does it mean? For me, that grapevine is an asset to me. Yes or no? Why is it an asset to me? Because I'm holding that for almost 10 years, and after 10 years it will give me future economic benefits. That is why it is an asset to me and covered under PPE standard. Is that okay?
Yes, ma'am. Ma'am, means in burial plants, we can sold our scrap.
Forget about scrap. Scrap, though we will
Oh,
sell it anywhere. Okay, don't think too much
okay,
about scrap. Just
okay.
think, what is the usage of that plant? Am I holding that plant for 1 year or
Or
less than
more
1 year?
than, or
One
more
year,
than
more than 1 year,
1 year.
or less than 1 year? Yes,
Okay,
yes.
okay, ma'am.
That
Thank you.
plant will take, to grow itself, it will take 10 years. Then it is giving you the output or the produce. Until then, you are holding it as an asset.
Okay.
Okay.
Ma'am,
Ma'am,
example of biological asset.
We discussed now. You're asking about animals or plants?
Plants.
Plants, maize, wheat, brinjals, all vegetables, everything.
Which take less than 1 year.
Yeah, All the vegetables mostly take less than 1 year only, na, the plants.
Exactly.
And maize
And
also, wheat also, they doesn't take more than 3 months. Every 3 months they start cropping them, and then they start,
yes, ma'am.
doing one more
Ma'am,
batch.
can you please give me the example of animal also?
Animal, pigs. You have so many animals, all the animals. You have cows. Cows will give you milk, correct? Goats
Yes,
will give
ma'am.
you milk. The produce out of the animals is their milk or their meat or their, some people also sell their skin. So
Yes,
all
yes.
those are like sold, right? Any animal, not just one.
Sheep, wool.
Sheep, wool, yes. Cow ka milk is sold. That is agriculture produce. No, what is the produce? Produce means what? What is coming out of that? Milk can be sold. You can earn amount out of it, right? That's the produce. All animals, living
Also
all
there is
animals. हाँ.
also there is a cat like जिसका poop मैम is a coffee को बनाने में काम आता है.
Coffee का?
Like famous. Like there is a मैम particularly एक जीन्स है कैट की जिसका जो poop होता है वो कॉफी को बनाने में आता है जो कि बहुत ज्यादा कॉस्टली होता है. It's very expensive. तो
Okay.
वो भी इसमें कंक्लूड होता है.
I don't know. I didn't get your example. It is used in coffee.
Yes, ma'am.
Okay.
Yes,
I'm
ma'am.
not
And
sure
ma'am,
about
it
it
is
then.
like more expensive, ma'am. Basically
Okay.
sold in South India only.
I'm not sure about it then.
So, ma'am, basically, a living animal, these are used in the course of the business, but these are not included in the PPE part.
PPE standard, yes, that's it. These are
And
also
also,
biological assets.
and also this biological acid or plant, like, are these things important as per the exam point of view? Because I have been in any past year, have been these questions asked.
Mostly no. For inter level, though, I would say no. But for your final level, though, since I told you you have a separate standard for it, there it is
Okay.
like important. They completely ask you in the form of questions like this many pigs are there, this many years old pigs are there, this many years cows are there. So how do you value them and all those? Because it should be valued at fair value and all those things. So in final, though, it's very important. But here, I mean specifically biological assets ka concept, though it is fine. You just have to understand what it is. That's it.
Okay, ma'am.
Ma'am, in case of poultry farm where hens were being used for selling, ma'am, they were not kept less than a year, no, ma'am.
Yeah, living animal, na. That's also a biological asset. Hens are
Okay,
also
ma'am.
animals only, na.
Yes, ma'am.
I don't think too much about animals, plants, and all. Stop about animals and
Ma'am,
plants.
while coming to bearer plants, incidental scrap sale, like the market value will be nullified, right? The scrap cannot be sold. Example, grapevine, like either it is
If you're
sold
able to sell them as scrap,
after.
it is good. No, few things can be sold as a scrap. Incidentally, they're sold as a scrap. No.
Ma'am, one of a condition is it cannot accept for incidental scrap sales. Like they have
Which
mentioned
means
one of
now
a condition.
your intention should be what? To sell only rubber. Okay, to sell the rubber which
Yeah,
is
ma'am.
coming out of the rubber tree, not to sell those trees or wastage. Okay, that wastage or the trees that you have to clear out and do the next production, those will be part of like the scrap sales that will come to you by the end. Okay,
Yeah, ma'am.
incidentally some scrap sales that are coming to you, it is fine, but your intention is not to sell those trees. No, your intention or your produce is to sell what? Rubber.
Key intention is rubber. Yeah, ma'am. Okay, thank you.
No more animals, please, here. Just understand what is a bearer plant and then ignore it. Okay, now I'm moving on to the recognition part. Recognition means what? When will you recognize, or if these two conditions are satisfied, only then you will recognize the PP in your books of accounts. So the first condition is future economic benefits. Probable future economics should flow into the organization, which means what? Now if there is a asset, now I have a building. Okay, this building, I told you the purpose can be for rental, or the purpose can be for administration, or the purpose can be using it in the business also. Now let us take rental example. Now, if you're giving it on rental, what will happen? Rent comes into you. Rent is a income that is coming to you. Agreed, everyone? So this is a future economic benefit that is going to come to the organization. So yes, this can be recognized as a PPE. Or suppose the building is used for marketing. Okay, directly it is not giving you any inflow. Did you get any income out of the marketing? No, but indirectly, since you have done marketing, your products are sold. Indirectly, you are getting the income or inflow. So it is not that you have an asset, it will directly give you an income. Indirectly also you are using that asset to generate income, then also you can recognize it as an asset. So future economic benefits should flow into the organization. Probable. Why are we saying probable? Because it is talking about future. I don't know how much economic benefits will flow. It's just a probability of having a inflow, right? That's the first condition. Now, the second condition is cost must be measured reliably, which means what? If suppose I told that I have purchased a building and I told that this building, I will use it for rental and I will earn income out of it. Good. The first condition is satisfied. But I told that this building I got from my friend who gave it for free. It doesn't happen, just an example. He gave it for free. Now, can you measure the cost? What is the cost of the building? We can't measure, right? Or there is another option to see in the location, in that nearest location, what is the cost of a similar building. You can look at that. Since it is a building, you can find, but some kind of a machinery or some kind of an equipments, you may not find a similar value also. In that case, you can't recognize it as a PPE. So one thing, you should know the cost, because what will be the value I will show? When I'm showing in my balance sheet as an asset, I need to show some value. If I can't measure that value, if I don't know that value, then what is the point of recording in my books of accounts? So the second condition is cost should be measured reliably. The first condition, it should have a probable future economic benefits flowing into the organization, not outside the organization. It should come, income should come, not expenditure, right? Some benefits should flow into the organization, and it should be the cost should be measured reliably. If these two conditions are satisfied, then you will record that asset into your books of accounts. Otherwise, no. Am I clear? Before
Yes,
this,
ma'am.
what should be satisfied? Before even we are checking for recognition, what should be satisfied? Definition. Yes or no? First, it should
Yes, ma'am.
meet the definition. If it is meeting the definition, then you will check for the recognition criteria. If it is not meeting the definition only, then there is no point in checking for recognition criteria. So recognition part is clear. This is very simple, only two conditions. Now, how will you measure the PPE? At recognition. At recognition means what? At the time of purchase, we can say. At the time of purchase, when you're actually purchasing, suppose you purchase this asset today. At today, you will record it at cost. Okay. What is included in the cost, we will see. Don't worry. What is included in the cost, whether some inclusions, exclusions are there, all that we will see. But when you have actually purchased today, at the time of purchase or at the time of recognition today, you will record it at cost. Okay. After recognition means what? After 1 year. Okay. After 1 year or after 3 years, it can be after that, at any point in time. If you want to change, you can change from cost to revaluation. Okay. What is cost model? What is included in cost? What is included in revaluation? Everything we will see in detail. Don't worry. But for now, understand, at recognition, it should be recorded at cost. After recognition, it can be exchanged from cost to revaluation model. Right? Now, I was talking about the initial recognition, right? I told at recognition, it should be recorded at cost. Now, what is included in cost of a PPE? In cost of PPE, we have purchase price, any directly attributable cost, decommissioning, restoring, and similar liability. Now, I will not talk about these two. I want someone to talk about these two because I discussed these two when we were discussing inventories. Anyone who wants to give a try? We'll stop with this. I know the time is up. Just one or two things we'll discuss.
Ma'am, can I try, ma'am?
Yeah,
Like purchase price means the price that we paid while purchasing the PPE. And any directly attributable cost means any cost that is incurred to bring the asset into our factory or manufacturing unit or to our business,
Location.
to our location. That is called as any directly attributable cost. Any cost that
I
involves.
also gave the list, if you remember. In the cost, we have included the list, if you remember, purchase price, and there are other things also. Can you name
Yes.
them?
Purchase, duties and taxes, which we cannot,
Right.
irrecoverable duties and taxes.
Very good. Yes.
And freight charges, which is
Sorry, freight. Okay. Okay.
freight charges.
Okay.
And if there is any rebate, we have to minus the rebate.
Rebates. Okay. Any
Or any
discounts also?
discounts, that also we need to mine it.
Okay. Yes. This is exclusion.
Exclusion.
These are
yes.
like added, and this is an exclusion. Anything else?
Anything of like insurance also, if it is needed. So that has also been included.
We can say all these are like directly attributable cost, correct?
Yes.
Any other cost?
Storage cost.
Storage cost.
If it is necessary
needed.
if it is necessary to bring the product into the location.
Very good. Very good. Okay. Yeah. So, which means almost what we have seen in the inventories cost, same thing will be there. Directly attributable cost, though, will cover everything, like to bring to your location and the usage, whatever cost is required, that you will have to include in the directly attributable cost. Now, what is this decommissioning or restoring cost? We'll see this. Decommissioning or restoring means what? Suppose there is an oil mine. Okay. Now, this oil rigging, whatever we do, what happens is, suppose I have taken this for 10 years. I can do this mining for 10 years. After 10 years, the government told me that you will have to restore this completely into the same position, or there might be some quarry kind of things, right? So all those things, when government is giving you such kind of contracts and all, they will tell you that you will have to restore it back into the same position. How I have given to you today, after 10 years, you have to give it back to me in the same position. Such kind of things, if you have to incur any cost. Now, after 10 years, if I have to restore it back to the same position, I have to incur some cost. It won't be free for me, no. Such kind of a cost also should be added to the cost of PPE. Because after 10 years, I can't, suddenly have some amount coming up to me saying that this is a cost I have to incur. So anything that you're expecting that any restoration has to happen, or decommissioning. Decommissioning means what? Now, suppose dismantling or decommissioning are like an asset.
Dismantling,
yeah, dismantling also. Assets have to be removed from that particular place. They have to be dismantled, and then only I can give it back to them, or I can sell it. All such will require some cost. So we are expecting what can be the cost in future and adding them now itself to the cost of the asset, just to be on a safer side, because in future that cost will be huge for me and I can't take that risk. So I am adding to the cost of the asset so that it will be depreciated over a period of time, useful life come. Right? These are the inclusions of a cost of.
Ma'am, can we say decommissioning and restoration charges as cost as a future estimated cost, like
future estimated? Yes, I will estimate that in future,
like
after
an
10 years.
assumption based.
After 10 years, I might have to incur some 20 lakhs after 10 years. That is my expectation only. After 10 years, it can be 20, it can be 30, it can be 25. The amount will change. But at least for now, if I do some expectation, I'll be on a safer side, no? Rather than doing the entire expenditure after 10 years, if I treat them now itself, I'll be on a safer side. Right?
Ma'am?
Yes.
Ma'am, here in the third thing, the decommissioning and this, in that you told example of oil mining, like the government gives land for the oil mining, and then after 10 years, it says that to give that oil mining land to
oil mining land, you can't give the oil back for sure, but the place, because for mining you will have to dig so many things, or you start having some changes to that location, no? They will tell you that I don't want all those changes what you have done. You bring it back to the same position like how I have given to you, not oil back for sure. Okay.
Ma'am, everything will be mentioned in MOU, right?
Yes.
Like
yes.
Okay, ma'am. Thank you.
If it is that kind of a contract, it will be mentioned in MOU.
Ma'am, apart from oil mining, please give one more example for this third one.
This quarry ka, you know, they will have to
Ma'am,
dig the
towers,
stones.
building
Huh?
towers
Building?
is the best example, right?
Which one?
Tower is the
Construction.
best example. For third, yeah, ma'am. Like recently, nearby my home, they have planned one to incorporate one tower. So that would be the best example, right, for decommissioning and restoration
Yeah.
liability.
Yes, yes,
Yeah.
yes, yes. I mean, they will have to do that completely. You know, see, when they're constructing a building, or few cases, not in all cases, they might have done some extra things also. So they will have to remove all those things, clear the place, and keep that restored into the same position, right? All that is our cost only because it is included in the contract. So that cost I'm adding to the asset. This example, if you're asking, this mostly applies to the ship also. Ship decommissioning also have to be done sometimes. That is also one example for decommissioning and all this.
Ma'am, what is the meaning of decommissioning?
Which means I will have to incur some cost to either dismantle it, or I will have to incur some expenditure to, you know, bring it back to the same position. Right. Ship is decommissioning matlab kya hai? You know, the ship, like if you're taking the example of a ship, what will happen? Suppose I have done some changes to that. I will have to remove a part of that, ship or aircraft or whatever it is, and rechange it, and then give it in the same position like how I have taken. Such kind of a thing comes under the decommissioning expenses or costs.
Ma'am,
Oil, though, they will have to close that oil well, or they have to clear that place. A quarry, though, they will have to clear whatever extra work they have done, all that things. Yes.
like, how is it possible, ma'am? Like, after 10 years, like in 10 years, many changes have been done on that land and on that oil mine. So, how is it possible for this company or this mining manufacturing company, that how is it possible that to
How
give
is it
back to the
possible,
owner,
matlab?
to restore
That
it?
is a contract we have. That is a contract we have. When you are entering into a contract with the government, they will give you with such conditions only. They will not tell you use whatever you want because it is a government property. Mostly oil rigs, these all these things are government properties. No, they will not
Yeah,
give you
ma'am.
like whatever you want, you do it and then leave after the contract is done. They will give you with a condition only.
So, from the
I
very
mean, we will
first
try
day,
to
this
restore it. We'll try to restore it to the extent possible. Few things so we can't restore. Correct. Whatever possible restoration we can do, we will do.
So from the very first day, this all mining will we keep in mind that we have to return those
Restore
restore.
it back. Yes, yes. Now today itself we know now that after 10 years or 15 years we have to give it back to them. Yes.
So this cost also will be included in the
Included.
everything
Yes.
included and then kept it. Okay.
Yes. So when you're adding all these purchase price, duties, taxes, in the end, you will also add this decommissioning cost or dismantling cost or any other restoration cost also to the cost of the asset. Okay. I'll discuss the exclusions and then we'll close. Please bear with me for 5 more minutes because this will be left idle again, exclusions. Let me discuss this also. Now, when you're talking about exclusions, you will not include the cost of opening any new facility or business because this is like a business expansion. Okay. This is like a business expansion. So you can't take it as a cost and add it to the value of the asset. This is kind of a new thing that you're opening up. So it is not like something that you can add. It's like a business expansion, right? So these costs are excluded. And suppose you're introducing a new product or service, the cost of advertising that or promotional activities, such kind of things are also not added to the cost of the asset. And when you are, conducting a business in a new location, the staff training, mainly the staff training cost cannot be taken as a cost or it cannot be added to the cost because staff training, you provide training to the staff, but do you think that the staff will stay back with you in future? No, right? What is your expectation? I gave training to them, they will stay back with me in future, so it is like a future economic benefits to me. I will add it to my cost of the asset, but you can't say that because when the person will leave the organization, we are not sure, right? So this cannot be added. And administrative and general overheads, we have seen yesterday also. It is again exclusion, because all those are general costs. We can't add it to the cost of the PPE, right? Mostly these looks like, asset acquisitions or your business expansions. And I mean, these cannot give you future economic benefits for sure. That's why we will exclude them. But the purchase price, any directly attributable cost, though, they're mandatory and have to be included in the cost of the asset, along with the decommissioning and restoration charges.
Ma'am?
Yes?
But if we are doing a business expansion, so that probably it will give a future economic benefit, no? So why it isn't then being excluded?
We have a problem on this. I think in that problem, I think you will be clear with this. When it is completely a new business, when you're acquiring all the assets and all, that's a different story. But you wantedly are doing something. There are two different questions based on this. Don't worry about exclusions. Don't worry. We have questions on this. I think then you will be more clear rather than discussing it like this. For now, just understand these are the exclusions and inclusions.
Okay,
Other than exclusions, you have any questions? Let us discuss. Anyone has to leave, please, you can leave, because I'm closing it for now. That's it. We have to discuss other things also. We'll continue it tomorrow. I mean, the next class. I think next class we have it on Friday, if I'm not wrong.
Ma'am, you will give screenshot.
I'll share this PPT. But this PPT is mostly from your study text only. It is already, the charts are there in your study text. Yeah. All these charts are there in your study material. So just check your study material once you have all these charts there. So shall we close then?
Thank you, ma'am.
Thank you.
Thank you, ma'am.
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 Yes, we can.